Hi everyone, hope you're all doing well. Welcome back to the channel. I hope you had a good weekend. First of all, apologies, there's no video for me today. I haven't got enough time to film the camera then flip it back around again, so I'm a bit short on time, but that's okay. I'm sure some of you guys appreciate not having to look at my face. But we're going to get stuck on today's video. We're going to talk about a stock that is having a really tough time, a UK stock. On the Patreon, we covered Wetherspoons on the stock request, which was the second exclusive video on Patreon this week. But on the Discord, we had the stock request was really close. It was between Wetherspoons and the other one was Dr Martens. So I said, whichever one I don't do, I'll cover on the YouTube channel. So obviously, we covered Wetherspoons on the Patreon, which you can join the Patreon with £5 a month, or you can actually watch that video. I've actually got a new feature where you can just pay to watch that video. I think it works out as £3 a video, so if you do want to see it, it's there. So obviously we covered Wetherspoons, so that means today it's going to be Dr Martens. We have covered Dr Martens on the YouTube channel before. We covered it on the YouTube channel around about a year ago, as you can see here, and then around 9 months ago. So we've not covered it for a while, but we've covered it a couple of times before. Both times I said that I don't really like the stock and I won't be buying the stock, and today I'll give my updated thoughts about Dr Martens. I am going to carry on the video from these last two, so if you want more of an insight into Dr Martens, go watch those videos. But today we're going to be looking at any updated information with Dr Martens and if my opinion has changed on it, which it slightly has, which I'll let you know a little bit of secret on. So Dr Martens having a tough time, year to date down 43%. It IPO'd during 2021, and since that time frame, yeah, the stock is down 88%. It's been a tough time. The company is a 477 million market cap, so still a pretty decent size. 7 times earnings, but that's not really a true reflection of earnings because the profitability is about to drop huge. So just bear that in mind when you're looking at sometimes some of these. Dividend yield of 5.13%, but there is risks about the dividend being cut once again, so just bear that in mind. Dr Martens overall, I'm sure you guys have seen it, mostly known for selling the shoes. They've got a few variations of the shoes between men and women. They do a couple of accessories as well. Now, I'm still surprised they haven't gone into clothing a little bit more. I think if they were to do a couple of t-shirts with the Dr Martens brand on, I mean, obviously they're well known for the shoes, but I think a good variation potentially, even if it was just 20% of the stores, would be something good for them to kind of go into. But they have tried to do some new arrivals, as you can see here, and some different styles. Somebody was posting on the Discord the other day about one of the new popular styles that is out, which I actually can't see on here. But it's a well-known brand. You know, you look at Dr Martens, it's a company that's been around since 1945. And when I look at Dr Martens, do I believe the company will be around still in another 20 years' time? And I think so. I think it's a popular brand that can last that length of time. However, obviously the stock isn't performing well. And why is the stock not performing well? Well, financially, they're doing terrible. Revenue down 12%. Gotta say, the DTC revenue mix is good. That was up 9 basis points. Obviously, if you're selling more direct to the consumer, that will give you more profitability. EBITDA down 19%. EBITDA margin down 2 basis points. Profit before tax was down 42%. Profit after tax down 46%, and the EPS down 45%. Net debt as well, an increase from 288 million up to 357 million. And as you can see here, the dividend went down from 5p84 down to 2p55, which I still don't know why they're actually paying a dividend at the moment, but we'll mention that a little bit later on. So the financials are poor. These are terrible. There's no other way to kind of put it around here. Is disappointing. And right now, you know, if you're going to have a successful company, what do you need? You need to have revenue growth and profit growth. Do you have those things with Dr Martens? No. And if anything, they're very far off it, which is very worrying. Now, I had a quick look down at the outlook here, and they actually are forecasting a recovery into the back end of the year. But I'm sorry, but a big thing comes down to management. Management make or break your company, and sometimes, you know, I've seen it before where I learned this quite hard in 2021. Is there's businesses that say oh yeah, we'll recover by the end of the year, and then they don't recover. And they said, oh, don't worry, next year we'll recover next year, and they don't recover. It just generally doesn't. It doesn't turn out to happen, and that can be disappointing when that happens. It can be kind of pulling the wool over the eyes of investors sometimes. Sometimes management teams will tell you something, and it won't ever happen. Future-looking statements don't always end up executing, and it's, you know, to believe that right now. You don't know. They're trying to suggest they're going to have numbers at this point in 6 months' time. They don't know that. The only thing you can go off is the numbers that they've actually done right now, and that's fact. And right now, when you look at the facts, the numbers are very poor. And if you're an investor, you need to see improvement, because if you don't see improvement, you won't have success. And that's always been my big issue, is that I can never buy Dr Martens until we see this sort of financial point turn around. Now, the other big thing with Dr Martens is you do have trends. So sometimes it's popular, sometimes it's not popular. And right now, I think Dr Martens is going through one of those trends where it's not popular. I do believe one day Dr Martens will have that point where it does go back to being popular. Obviously, right now, that is not going to happen. And the big kick in the teeth, which is probably the reason why we're doing this video, because on Friday or Thursday, it had a horrible drop, another nearly 20% drop on the stock price. And that came out news that basically all the institutions are dumping it, and even some institutions are actually dumping it at a 10% discount to yesterday's closing price to even get rid of it. So this is worrying. The fact that people are just waiting to get out of the stock. I mean, I don't know how low it can go, because you look from the IPO price, it's already way below the IPO price, but it looks like everyone's still, really desperate to kind of get out of the stock. So it looks really negative. However, I'm a little bit more positive from where I was a year ago and 9 months ago. And when I come to the buying points, is there any buying points for this company? And you know what? I'm a little bit more positive than where I was 12 months ago. I'm not going to be buying, but it's definitely one on my watch list. The reason why is because if you look at analyst numbers, apart from obviously this year, big drop in the revenue, big drop in the profit as well. And that's going to actually put it more towards the 17 times earnings, which is a lot historically what it's normally traded at. If they do start going back to the growth in 2026, and I think if we'd go on Simple Wall Street, I think they even have forecast into 2027. If they go from a point of view where they go from 28 million up to 55 million up to 77 million, if this company does 77 million in profit in 2 years' time, at a 497 million market cap, I've got to say, it's actually not bad of a value. In fact, it's a very good value. If they came out with 77 million profit in 2 years' time, the stock would probably be 2x higher than where it is right now. However, well, like I said, are they going to get there? That's the big issue that we have. And judging off the current numbers they're doing, they're way off there. And that's why, for me, I would have to see them start executing to even think about buying this one. Because if they did these numbers, it'd be good, but are they going to get there? We don't know. Analysts are never going to have forecasting negative growth for them. But if they were to get there, sure, it would be probably successful for the business. So can the company turn around? Potentially. If the trends come back for Dr Martens, if we have hit a bottom, how low can it go? Is this the kind of bottom? Dr Martens were very popular a few years ago. Now they're not as popular. Is this potentially the bottom for the stock? We'll see what happens. Even through all these tough times, though, you've got to say, at least the company's still making profit. It's still making 28 million in profit, which isn't bad. And the other thing from my point of view, is when a stock could come a takeover target. And I think, when you look at Dr Martens, it's a big brand. Somebody would think, I can make that Dr Martens brand work. And if they're still doing good amounts of profitability, if they're still doing 831 million in revenue a year, at some point people would go, if this is near the bottom of the financials, I reckon somebody would look at that and go, this is potentially a takeover target. Now, I've got to say, the balance sheet is a little bit of a mess. As you can see here, it's not nice having that debt. And I've got to say, I still don't know why they pay a dividend. They're currently still paying a little bit of a dividend at the moment. If I were them, I would just cut the dividend and then put all of that down into, paying down the debt. That's what I would do if I was the management team here. Inside and front, there's no buy-in, which is also a sign that if management are so confident that they're going to do the numbers that they suggest and what analysts suggest in here, which looks really good, what would give me more confidence is that, insiders come and buy the stock, and they're not doing it at the moment, which makes me a little bit nervous around, is it going to happen? And the other thing is, I look at the CEO of the business, who's been there for the last kind of 6 years, and, is it kind of a bit of a change for Dr Martens? Is it the time where we have to look at potentially Dr Martens kind of reinvents himself a little bit? Like I said, even though Dr Martens is a famous shoe brand, if I were them, I'd be looking at, it doesn't have to, 75% of your sales can still be shoes, but, why are you not expanding into some form of, clothing? They have got bags, for examples, but, you stick a Dr Martens brand on a t-shirt or a polo shirt, and even if it's just like a couple of variations of it, you got another income stream there. I don't know why they don't do that. So maybe a fresher management team could realise something like that. But I look at Dr Martens and, yeah, I kind of go back to my old videos. I'm not buying at the moment. I can't buy a stock that's doing these financials. I would have to see some signs of improvement. And even then, I'd get worried around the balance sheet a little bit. But if the company does go back to these numbers that they are expecting, what analysts are expecting, what they're forecasting, if this company does 77 million in the next 2 years, without doubt the stock will double up from these prices, in my opinion. The big problem is are they going to get there? And the confidence for me to get there would be to actually see them execute on the financials and show the management team, like, if they started believing it, I think they would buy shares, and that's what would be my key drivers of that. I would buy it. And right now, do I see the risk to reward? I actually see decent risk to reward in the stock. It's just that I don't see them turning around at all. And if anything, I think the option of a buyout, someone does come buy the brand, it could happen. But the issue that you have is that you're gambling. If you're investing and hoping that somebody's going to take them out, that's basically gambling. I don't want to gamble. I want to make sure there would be a decent business on there. So yeah, Dr Martens, my opinion is a bit pretty much saying where they have been previously, although I'm a little bit more positive because if the stock does bottom and they do go to these financials, I think it's pretty good value here. The question is are they going to do those financials? And for me, I would just sit back and see if management prove they can deliver. I got burnt by so many management teams that said, yeah, we can do those financials, and they never did, and then you got burnt. I would like to see those financials on paper, and you might miss a bit of a 10% jump, a 20% jump, but I'd rather be 100% sure that they can deliver on there. And that would be my point on Dr Martens, where I'd be a lot more interested. So yeah, at the moment I'm not buying. I've got it on a watch list, and if it does show some improvement, if there's some insider buys, I'll come back to it. But right now, I'm not going to be buying Dr Martens at the moment. Hope you enjoyed the video, guys. If you could hit the like button, if you're new around here, subscribe. Try and get me to the 16,000 subscribers, guys. If you can, we are so close. We are literally, hey, look at that. Dr Martens adverts coming up. We're literally about 40 subscribers away. So if you can get me there, I'll do a live Q&A session on Sunday for you guys. But apart from that, thanks for watching. See you in a bit.